Thanks, Terence, for joining us. So maybe we can start with your year-end target for Klci. I understand for 2016 you have a target of 1,850 points. What kind of assumptions are you pricing in to actually get that target? And would you consider it a bullish target?
1,700 was my target for end of this year. 1,850 is my target for end of next year. And I don't think it's unreasonable. If you look at the prospects going forward, we're looking at about 8 to 10% EPS growth. And we have applied a PE target of 15.5 times, which is the 3-year moving average. And if you look at the past few quarters, we were expecting third quarter to be quite bad. And indeed, it has turned out to be actually even worse than we thought. But very quickly, the markets have rebounded in fourth quarter. We did expect fourth quarter to be better, but it's much faster again than we thought. So you can see that it moves in very volatile, extreme points.
Now on that note, Klci has actually rebounded since end of August. But how real or believable is this rebound? I mean, if you compare to corporate earnings for the third quarter and fourth quarter, perhaps even, doesn't look too exciting.
Well, in the first place, when the market fell, it fell a lot sharper than we thought. It fell from a high of 1,800 plus to down to 1,500, so that's about 300 points loss. So for it to rebound is also quite expected because really there was excessive selling and excessive pessimism. On the first place, we are still down for the year. It's not as though we are up. And for the markets to go higher from this point of time, you don't need that much positive news. The absence of negative news itself will help the markets.
What are the main risks you reckon actually for the Klci to actually drop to levels of 1,500 like it did back then?
For it to drop back down to those levels, I think we need to have a near perfect storm, as we did previously, where you had a combination of many factors. So you had currency, you had political issues that surfaced. You had a whole bunch of other things, external factors that affected Malaysia. So we think that a lot of the bad news is priced in, and a lot of foreigners are quite underweighted in Malaysia. So for them to sell down further from these levels, unlikely.
What's your view on political risk in Malaysia in terms of dampening the country's economy or even the stock market?
The political side of it, my view also is that the noisiest part of the political issues came out in August when there was a cabinet reshuffle. So that was somewhat unexpected. And at that time, of course, it was the loudest in terms of political news. But going forward, we suspect that the noises will start to get less loud or quieter down over time. So that would actually also be positive for the markets.
If you look at value cap of its 20 billion ringgit that it has been allocated to buy undervalued stocks in Malaysia, how much of a boost actually will this give to the Malaysian stock market?
The way it happened previously was that they were very careful in their investment approach. So they are looking for stocks that have become bargains. Share prices have fallen a lot, value is there, and they're looking at outperformance. So value cap did quite well. If I'm not wrong, they probably saw about 4 to 5 billion as the capital before. They grew it to more than 10 billion, so they returned it to their shareholders and everybody is happy. So this time it's a bigger amount, but of course the market itself is also bigger. And I think they will take the same approach, which is they're not going to push the market up. That's never been their modus operandi. Basically, they're waiting for panic selling. They're waiting for foreigners to sell out aggressively. And so, for example, if the Naga share prices fall, they will see that as a bargain opportunity. So more like a protection on the downside, knowing that value cap will come in as and when bargains emerge.
You do not think that the stocks that a value cap will be looking to buy are actually politically linked stocks mostly?
No, I don't think so. I think if you look at the track record of value cap, they have really gone on companies that have fundamentals that have become bargain stocks because they've fallen a lot. So some companies may meet the criteria of being politically linked and also having fallen and valuations have emerged, then it coincides. But I don't believe that they will come in purely to buy up politically linked stocks. Actually, there aren't that many politically linked stocks compared to the old days anymore.
When you go for marketing activities in the region, for example, you just came back from Tokyo, what are investors or fund managers actually saying or feeling about Malaysia?
I think biggest concern is reflective of what's been happening in the market, i.e. one of the reasons why the markets has fallen is because of the political issues, issues relating to 1MDB. So concerns on that front has scared away quite a lot of investors. Most of the clients we spoke to in Tokyo are quite underweighted. So 9 out of 10 were underweighted, maybe only a small fraction were a bit more confident. But they were actually looking for stock ideas and they were looking for opportunities and the timing when to get in. Because the drop in the market as well as the fall in the currency makes Malaysia quite attractive. So I think they're positioning themselves for an upturn and they're looking for any excuse to buy.
When you mentioned that Japanese investors, they're looking to bargain hunt for Malaysian stocks, but does Malaysia stand out or they are also actually looking to bargain hunt in the region?
I think throughout the region also, I mean, value has emerged elsewhere. But certainly the people that I spoke to were focusing more on Malaysia. And because they were very underweight, and if you look at the shareholding ownership in Malaysia by foreigners, it's down to about 22%. So it's near the lows. The crisis lows was about 20%, so it's not too far off from that. So Malaysia seemed to be their focus this time around. But I mean, big macro issues is still a concern. So when they come in, it's anybody's guess.